Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today we're going to get into the wheat market a little bit. The wheat market took a big hit today. We're going to talk about whether or not we are going to see a bin buster here in Canada, or if we are seeing bin busters throughout the rest of the world, because that's what these markets are suggesting at this time. But first, let's get into what the general markets did today. Canola was down $4.10 today at 6.50 and 70 cents. Minneapolis wheat took a big hit, 13 cents lower, 589.75 we're seeing now. So now back below $6. Kansas wheat down 4 3/4 at 517 3/4. Chicago wheat down 7.5 at 531.25. Not a good day for wheat today. Soybeans down 2 at 10.49. Corn down 3.5 at 409 1/4. We saw some small losses in soybean oil, 33 cents or 33 points, to 53.48 a pound. Canadian dollar down about a quarter of a penny at 72.49. Live cattle up again today, 133 at 238 a hundredweight, and feeder cattle slightly lower at 365 a hundredweight. All right, let's get into the wheat markets. I want to talk about spring wheat first. It definitely took a turn for the worse today and did so on some pretty high volume. As we mentioned in our morning commentary, actually, the wheat market volume has been recovering since the lows that were seen in July as a result of the switch over to the MIAX exchange from the MGEX. So we saw a lull in volume, but we are seeing that pick up again. We saw some of our largest volume days in the last 2 days, or along this contract, actually, with the volume being the highest today than any other day. When you get a move with high volume, it usually means that that is the directional bias of the market at this time. So if you get a good up move on big volume, that usually means that's a good sign for a bullish market. If you get a down day with high volume, that's not generally a good sign. The spring wheat market had trouble getting above the 20-day average, but it had kind of been leveling off here in the last week or so. I think I even called it anemic at some point. And, I was wrong. I'll eat some crow on that, obviously. We are still pushing lower in this market. It wasn't just spring wheat, though. We did see a new low in HRW today as well. Of course, this market has been, grinding lower for quite some time, even from the end of June. Since the end of June, it also has had a lot of trouble getting above the 20-day moving average. So that is acting. This red line here is the 20-day moving average. That is acting as some pretty good resistance at this point. Chicago was the one market that didn't make a new low, but as you can see, the 20-day moving average matters there too. We saw it come back up and test that level over the last couple of days, but it did fall off today. Not overly high volume compared to back, in the late middle of August. But we did see a lot of volume in the KC and the Minneapolis pit. Another thing that might be affecting Minneapolis wheat to some degree is, we saw the spread between Minneapolis and Kansas kind of rise from the middle of July, and it kind of hit a high here in the last day or so. That has now come back. We may be seeing a bit of a collapse of the spread between Minneapolis and Kansas when there's lots of good quality protein HRW wheat. The premium to spring wheat or HRS wheat tends to be relatively low, and it had been climbing up until yesterday and has really taken a hit today. So we may just be seeing a correction as well of some of that spread action that we've been seeing over the last little while. So we may be in for some further weakness in the Minneapolis if that's going to continue, or at least some contraction in between Minneapolis and Kansas. Another kind of headline here, there was an article in Western Producer today. Although it's hard to imagine that a Canadian article with data from a previous days from the USDA would have this kind of impact, but it does kind of highlight the issue with global wheat at the moment. Wheat doldrums are not likely to end anytime soon, according to the article, and the trade faces expectations of a large harvest around the world, combined with weather forecasts that are favorable towards the U.S. side. Production forecasts have also been raised recently for both Russian and Australian crops, although the Australian crop is still in its dormancy phase. This particular article specifically points out the lower demand of Ukrainian wheat into Europe as production in the EU has increased substantially. And the EU is set to increase tariff rate quotas after a moratorium that lasted from, I think it was maybe early spring 2022. And that expired recently, I think in June. So Ukraine is looking for avenues in which to dump their wheat because it doesn't look like Europe is going to be as friendly as it was before. This all culminates in a general feeling in the wheat market. And this is a graphic from a trader who I know from way back before I had any gray hair. Sell wheat, live in a mansion, the end. Seems to sum up the current wheat market at this point in time. So thanks, Dave, for giving me that little graphic. All right, let's move on to the Statistics Canada trade estimates for tomorrow. These were just released today or earlier this morning, or maybe it was late last night. I can't remember. I remember seeing it in my inbox today, thanks to Ed White from Reuters. Here are the estimates for tomorrow's Statistics Canada report. As you can see here as well, kind of focusing on wheat here. The wheat excluding durum is expected to be 29.9 million tons. So if you take out the 6 million of durum. So if you use Statistics Canada's acreage estimate of 20.5 million acres, and then you kind of take an average abandonment because there's always less harvested acres than there is seeded acres, this implies a 54.8 bushel per acre yield according to these estimates. The average is 53.7. So we are a full 1.1 bushels per acre above average, or at least that is what the average trade estimate is for tomorrow. So it's not the biggest yield that's ever been recorded, but it's still, again, 1.1 bushels above the average. So this is probably the first time that we've seen official, estimates that peg this crop above average. I'd like to know what you think. Will Stats Canada be that high on a yield base on their modeling estimate tomorrow? We do get another production estimate into the middle of September. So are they going to be aggressive in this one, or are they going to wait till the September surveyed and model-based estimates? What do you think of their modeling? Do you think it's accurate? Is it getting better over the years? Leave me a comment in the comment section below. I'd love to get into a discussion about that. There's lots of trains of thought there. So kind of, again, moving on to the canola side of these estimates. If we look at canola, we also see a 1.1 million ton increase expectation over Stats Canada's last year report. That implies a 42.1 bushel per acre yield. The average is about 39.7. So we are well above average here, according to the average trade estimate on canola, unless that average trade estimate on canola is also factoring in higher acres or something to that extent. So stay tuned. Tomorrow we will be sending out the results to our premium subscribers, and both by email, by text to our full consulting clients. If you want to be a premium subscriber and want to receive that email, go to CanadianAgMarkets.com and hit the subscribe button there, and we will get you included on that results, including our hot take on it after the report is released tomorrow. Okay, kind of getting into November canola by don't want to make this video too long, so I'm just going to touch a little bit here on canola. Again, that 41, has that 41.2 bushel per acre yield been priced into the market? We've been seeing this market grind lower and lower for quite some time. We saw some good up days in results or in association with the soybean oil market, but we continue to grind lower. Today, we kind of came down and tested that 200-day moving average. You can see we've been inside this channel for quite some time. So it's plausible that we continue to push towards the bottom of the channel. Currently, in the next few days, that would exist around 630, and it continues to decline. This 20-day moving average has also been a bit of a resistance point for that for this market, as well as this previous low that we saw at the beginning of July. So, the question is, are we through the bearishness in canola because of the good crops that we've been expecting, Or are we going to continue to see lower prices as the numbers come out and we start to see yield estimates that are likely going to be above average? So leave me a comment in the description. I'd love to have some discussion around these topics in the comments below. So please do that. That would be great. And we will see you again tomorrow.